All right, welcome back to Dan's Trades. As always, I'm not a financial advisor. This is not advice, purely education and or entertainment purposes only. Today I did another recording of a trade I took. Had the microphone turned off so I didn't catch any audio. But what I'm looking at here is the left side is ES, the middle is NQ, and the right side is YM of the micros. This is NFP week. Today is Thursday, December 5th. It's currently about noon right now. This is from the opening from the morning. And I took two long entries. You see there. I'll draw them in later, but I'm long right now. I got a target above. So we're two micro contracts. There's going to be a potential for a third coming here. So I'm just going to continue to test and watch, do narrative over my trade. So I got the stop down below the swing low there. And I'm also looking at the 500 to 600 range. So the stops, if it continues, goes back down into the 400 range. That's just another added confluence. We see the new day opening gap there. I'd like to see it go up through it. That's what I was thinking there. But since it's retracing back down, I'm looking at 3 PD arrays being the ones that I took the trade off of. But I just happen to see that there's a volume imbalance, a tiny little volume imbalance down here. So here's the first PDA. First PD array that I'll draw in. That was where my second trade was, and there's the first entry was on the top one. So I was looking at the first one, could have been a breakaway gap. It was not, so I added on to position in that fair value gap where the first entry was the first one. So there's the first entry, there's the second entry, and then we have a changed state of delivery. Price should continue higher depending on where I might want to retrace down. So we basically have 1, 2, 3 PD arrays that could be the stop right there. But I see this volume imbalance, so price could want to come down and wick right through there. So I might. That's why I'm keeping my stop back down. It has hit it once already, right at the open of the hour. Those two shaded areas are the macro boxes. So there's a free indicator out there from FX for a Living, who has recently opened up the OHLC Academy for a very moderate price based on the value it delivers, if you're considering it. So here's where I'm going back down to my original stop, and I'm going to put another limit order on. If it does want to come down, I'll take a third entry right here. I'm trading micros. This is NFP week. If you're brand new, you should not be trading at all. I will personally say that's one of the harder things that I've I'll zoom right in on this volume imbalance. There's where I was moving the stop to be below that. So it's multiple PD arrays. If price does want to go back down there, it's probably going to go lower. And then we see now in that time frame we're roughly 30 ticks to the good, 25. So now we're trading inside of that end dog area. And the green shaded area above is the opening range gap. That's from a free indicator as well. So that comes with the end dog indicator. So indicators only for time and price, nothing for anything that's doing math of any kind. And now that we're trading back in, we're going to cut that. We don't need that limit order anymore, so the price is not going to come down and make us 3 contracts. So there's the first entry. You can see it better. First 2 entries over there. And we're targeting the bodies and those highs right there. There's the first presentation fair value gap for today. We've been trading through and around it a couple times. So looking for a confluence across all the indices. Sometimes they like to play together. Sometimes YM likes to do its own thing. I do like to see correlation, especially between ES and NQ though. Those two are more closely correlated. So there we see prices now trading to the top of the end dog. We like that. I'd like to see it go right through. So I think I draw in the inversion fair value gap. That's almost a direct overlay on the first presentation. Yep, here it is. So we're looking at this right now. Looking at this being an inversion fair value gap. Not a traditional bearish one like most people might think. That might be the hardest thing to get nuances, but my higher time frame bias is bullish, so I am treating this as an inversion fair value gap, and I want it to go straight through it. So that's why I drew that the way I did. There's consequent encroachment. Continuing right through. That's exactly what I want to see. My first partial is set there. Since it's two contracts, I do have one more target higher above. All right, so very happy with that price action. 80 ticks to the good. So once price hits my partial, I'm sitting there waiting to modify the stop order, is why my mouse is hovered over the sell stop. As soon as it takes out that, I'm switching that sell stop to 1. I'm debating on taking the 1 off since it came super close to it, and I've seen so many times that it respects the bodies versus the wicks. But it's just a matter of being patient here. 21,529 is the high of the fractal time right now. That's why that blue arrow is there. It's one of the OHLC indicators that FX for a Living has built and provided. That's the fresh flesh that you've heard ICT speak of. These are all based on ICT Concepts, or just some random person on the internet that's taught how the markets operate, one or the other. So there's the higher, looking at potential market maker buy models there across all indices. I like the way that looks. Now we just sit and wait for the target to get hit. Trying to have patience. Usually it slams right up into these, so when they slow down is when I start to think it's like, okay, is it not gonna drive through it? But there it does. Here's why I really love my broker sometimes. Price is clearly through my sell limit order, and it takes until, are we gonna trigger? There we go, finally triggered. Modify the stop. Now we only have one contract on, so partial's taken. And we're gonna move the stop. My first thought is right below these PD arrays. I don't want to come back down, but we could come back down into a bullish fair value gap that's also right inside of that area. So in case it did retrace back down, I believe I moved the stop a little bit lower for right now. So there's what I'm seeing right there. I like that down close candle on these 1 minute charts. There, I'd move the stop below that down close candle because price could retrace back into those 1 and 2 previous fair value gaps at any time. Since we do take buy side liquidity, price can retrace back down to get more sell side liquidity. So we just passed upper quadrant of the opening range gap. That is something else I also watch for. And we have the previous hour's high back there and the all-time highs that just happened in the morning where I took a few shorts. So I was expecting price to come back down to sweep that liquidity from the London lows, so I took a few short scalps, and then I waited for the London sell side liquidity to be taken, and then I entered the long trade, which is my higher time frame bias. And there's a target up on top. 21,580 and a quarter, and that target is derived from the weekly chart from previous weeks. Since we're at all-time highs, you have to use fib projections. At least that's what I personally use for seeing where price may go to the upside. Looks like they might save that for NFP, so I wouldn't be surprised if we hit that tomorrow when NFP comes out, but we'll just sit and watch. Continuing higher. This is where patience does come into play. We're sitting at 130 ticks with looking at a possibility of 300. Take some screenshots. Save it for the journaling. And now we've taken that previous high, so there is other buy-side liquidity that I don't have marked out at this time, but you did see it at those highs. So once you have enough experience, you don't have to mark up everything. You can just see it and read it naked. I do add it in after the fact so people that are learning can understand how I'm applying the concepts and the language that I have learned from my mentors. ICT being the main one, David and Focus over at OHLC Academy are literally the best community I've seen, and I've been in a few, as you've seen me talk about. You know, not taking anything away from Kid or Zeusy or the ones that know, but OHLC Academy, live streaming every day, access. Kit reads price live. I love Kit for doing that. I have not seen Zeusy read price live, so that's my only feedback on him, and that's why I don't follow him as closely as I used to. I leveraged what I could, just learning MMXM models. He's one of the people that do teach good things, but I understand he doesn't teach everything that he wants to, and I completely understand that. That's his prerogative. Being able to see things as they happen in real time, live streaming, is what's needed, just like I think ICT's even saying it. So if you're with someone that's not showing it live and only shows recorded, find someone else. I highly recommend David over at OHLC Academy here. Obviously, I'm part of it. Yes, I get, okay, so I'm looking at moving the stop here. I do like just 100 ticks. I like looking at that, even though I'll probably get away from that. But it is what it is. It's NFP week, and I want to protect my profits. So I'm putting that up above. Price isn't looking like it wants to continue. We're definitely decelerating. We're slowing down and just hovering over. Yes, the market is open. This is live trading. Again, I'm not selling anything, doesn't matter. The only thing I'm doing is offering a referral. And yes, I do get a tiny kickback from a referral as an affiliate for OHLC, but if you know, he's got plenty of free stuff too. So the FX4 model is wicked insane once you understand how to leverage the concepts inside of it. So start there, and if you like more of it, if you want to see live stream, kick the tires on that. I think he's got a $2 a day thing. You can just get access to live streams. And if you want to get to the full membership, that's completely available as well. So looking at this, seeing, yeah, price does not want to, you know, we don't want to get out of the opening range gap. So that's one thing that's I'm not liking. So I'm probably going to cut this off. I don't even want it to come down to my, yep, I'm just going to close the trade right here. I don't want it even to come back all the way down to my stop at 100 ticks. There's another minute. So we're making, so we got the swing high above there, the swing lows right by my stop, so I could easily, so we'll just cut it off there. And that trade is over. So beautiful trade for NFP Thursday. Nice 30 handles after scalping. I think I took one loss because I entered just a little bit too early. And then 2 wins on short scalping. And then the nice 30 handle run for my final trade of the day, even without making final terminus. So you don't have to get to your target to be successful. Remember, tomorrow's promise for none of us. Live for today. Take care.